Traders War proudly presents the daily video with the best trading and investing alerts anywhere on any platform. With up-to-date stock, chart, and market news, TWR is simply your one-stop shop. Activate your 2-day trial of TWR All Access on the Discord platform. Stay tuned at the end for TWR Hot Products and Services. TWR Tech Video. Alright, so one of the TWR market warriors asked me to do a video on the VWAP. And basically, I'm going to talk to you about what this indicator is, what it's used for, and why it's such a powerful indicator, specifically for day trading and intra-day trading opportunities. Alright, so what is the VWAP? Well, this is a volume-weighted average price that is a technical analysis indicator, and it's used on intraday charts, and it resets at the start of every new trading session. VWAP is commonly used as a benchmark derived from a ratio of average share price for a stock compared to total volume of shares traded over a particular time frame. It is calculated during a specific trading session by taking the total dollar value of trading in securities and dividing it by the volume of trades. VWAP is important because it provides traders with pricing insight into both the trend and value of a security. This measure helps investors and analysts evaluate the current price of a stock and determine whether it's relatively overpriced or underpriced compared to the average trading price of the day. Often this information is used to facilitate the entry or exit of a position. The VWAP is used to determine the quality of executions in large orders. For example, if, say, a portfolio manager wants to acquire thousands of shares, right, but also wants to purchase the position below the average price for the day, the VWAP will usually be the price to beat. A trader tasked with acquiring such a large position will be considered successful based on the comparison between the average purchase price of the VWAP at the time the position was accumulated. Note that this also works with options on the day, but since it resets, swings are not as accurate. So understanding the VWAP. It's calculated by totaling the dollars traded for every transaction, which is price multiplied by volume, and then dividing by the total shares traded. So the formula for VWAP is total typical price times volume divided by the total volume, where typical price equals high price plus low price plus closing price divided by 3. And the cumulative total since the trading session is open. Man, that one word is a tongue twister, isn't it? Anyways, let's move on. So when calculating the VWAP, by adding the VWAP indicator to a streaming chart, the calculation will be made automatically. Basically, the platforms that you use will do this for you automatically via the indicator. However, if you want to calculate the VWAP yourself, follow these steps. You want to assume a 5-minute chart. The calculation is the same regardless of what intraday time frame you're using. However, we like the 5-minute chart because it is the chart of choice when entering and exiting into intraday trades. First, you find the average price of the stock traded over the first 5-minute period of the day. To do this, add the high, low, and close, then divide that by 3. Multiply this by the volume for that specific period. Second step, divide the PV by the volume for that period, and this will produce the VWAP. 3. To maintain the VWAP throughout the day, continue to add the PV value from each period to the prior values and divide this total by total volume up to that particular point. Now, to make step 3 easier, it's absolutely so much easier going into Excel, creating a spreadsheet, utilizing columns, and adding formulas. Because once you get it set, all you got to do is just plug and play, and it does all the work for you. So one of the questions that a lot of people are like, so why is this important? Well, it's because VWAP gives traders a smoothed out indication of a security's price adjusted for the volume over time. It is used by the institutional traders to ensure that the trades do not move the price of the security they are trying to buy or sell too extremely. And anytime we talk about institutions, we're talking about big money, right? And part of retail traders, we want to follow the big money. So this is a good indicator that follows that big money. For example, a hedge fund might refrain from submitting a buy order for a price above the security's VWAP in order to avoid artificially inflating the price of that particular security. Likewise, it might avoid submitting orders too far below the VWAP so that the price is not dragged down by its sale. Now we're getting into the meat and potatoes. So how is the VWAP used? Well, the VWAP is used in many different ways by traders. Some traders may utilize the VWAP as a trend confirmation tool and build trading rules around it, which is I highly suggest utilizing the VWAP for if you're going to use it. An instance of this would be considering stocks with prices below the VWAP as undervalued and with prices above it as overvalued, similar to an RSI that we're all familiar of. So if the price below VWAP moves above it, the trader might go ahead and go long on that particular stock. If the price above VWAP now moves below it, they may sell their position or initiate a short position. My option players out there, this is how you guys will utilize the VWAP in your arsenal, just like I just described it in the reading. Now, institutional buyers, including mutual funds, utilize the VWAP to help move into or out of stocks with as small of a market impact as possible. Therefore, when they can, institutions will try to buy below the VWAP or sell above it. This way, their actions push the price back towards the average instead of away from it. Now, key note on this, why would institutions do this? Well, one of the reasons why is institutions, a lot of times, they want to be able to kind of move stealthy in regular markets so they don't have to consistently go into the dark pools to make their moves. And this is one of the ways that they'll initiate the trades, because with the VWAP, it's taking that average daily volume, right, with price action, and they're kind of getting into where the battle is happening with the normal retail and day-to-day operations of that particular stock. So they're able to kind of slide in with some high volume stocks and slide out of it kind of stealthy like, so they don't get the pings with a huge push or a rush to the upside or a cascading effect to the downside, and then getting pinpointed by CNBC and Wall Street Bets and all these other people for being, the reason of the push or the decline. Now, getting into the significance of the VWAP, because it combines prices and volumes together in its value, most analysts consider the VWAP to be more representative of a true average price of the stock. The calculation of the VWAP in independent form and does not directly affect the stock's closing price. Since the VWAP calculation is based on historical data, it is still considered a lagging indicator, but that does not stop traders from utilizing this measure to establish support and resistance level suitable for intraday trading. In addition to this, because institutional traders utilize the VWAP for execution activity, the VWAP is considered to be highly influential in price action. Now, the difference between VWAP and, say, a simple moving average is on a chart, VWAP and a simple moving average may look very similar. However, the two indicators are calculated differently and represent different results, and that's the key right there. VWAP is calculated by multiplying typical price by volume and then dividing by total volume. Like the VWAP, the simple moving average provides traders with less volatile view of the recent price trend in a security. Now, unlike the VWAP, however, the simple moving average does not take into account the level of volume in a security's trading. The SMA is calculated by totaling closing prices over a certain period, say 10 days, and then dividing the total by the number of periods. VWAP weights each day's price change by the amount of volume occurring in that day, whereas the simple moving average incorporates price and no volume. Now, with everything, this sounds like a perfect indicator, but there are limitations, right? So VWAP is a single day indicator and restarts at the opening of each new trading day. Attempting to create an average VWAP over many days could distort it and result in incorrect indications. While some institutions may prefer to buy when the price of a security is below the VWAP or sell when it's above, VWAP is not the only factor to consider when looking for swinging long and short. In strong uptrends, the price may continue to move higher for many days without dropping below the VWAP at all or only occasionally. Therefore, waiting for the price to fall below the VWAP could mean a missed opportunity if the prices are rising quickly, making those higher highs and those higher lows and just continues to accelerate up. Also, VWAP is based on historical values and does not inherently have predictive qualities or calculations. VWAP is anchored to the opening price range of the day. Therefore, the indicator increases its lag as the day goes on. And this can be seen in the way a 1 minute period VWAP calculation over, say, 330 minutes, which is a typical trading session day, will often resemble a 390-minute moving average at the end of the trading day. Now, applying the VWAP, right? For the reasons previously mentioned, most professional traders agree that the VWAP is influential and useful when trading in short-term timeframes. Strategies for intraday trading utilizing the VWAP might be as simple as buying the first closing price above VWAP as an entry and selling at the predetermined pinpoint above it. But more often than not, the strategies for trading hold a little more complexity than that, and the reason for this is because the widespread belief among professionals and non-professional traders that enough institutional traders utilize the VWAP as a benchmark. Traders often believe that the recognition of this dynamic must be factored into trading strategy. As a result, a trader might use VWAP as a filter for their activity. They may go long only when the price is below the VWAP and short when the price is above the VWAP. This filter would be based on a point of view that benchmark beating buyers are more likely to create support when the price is below VWAP than when it's above it. And this filter would work well for days with relatively sideways price action. And by contrast, other traders may prefer the opposite tactic. They would thus assume entries for buying a stock should only occur when the price is above the VWAP, and short selling entries should only be undertaken when the price is below it. And this filter would be based on the point of view that the benchmark watchers are unable to get the price they want and will be forced to push the stock further into its trend for the day. This filter would work well for days that had well-defined trends for the day, whether upward or downward. Now, neither tactic executed over a large number of trades appears to hold any statistical edge. Therefore, traders often combine their VWAP approach with other indicators. And like I always say, you're trying to gauge the best probability of making money because nothing is for certain in the market. Now, to elaborate on this a little bit, for example, a trader can also use the VWAP in conjunction with, say, Boiler bands. These are a set of trend lines plotted 2 standard deviations positively and negatively away from a simple moving average of a security price that can be adjusted to utilize preferences. Notice how we're combining the VWAP as a more indicator, utilizing it for confirmation with other indicators, essentially creating what I like to call 3 reasons why to push that buy. Now, traders may enter into a trade based on a VWAP signal and exit the trade based off a Boiler band signal, or vice versa, or any other combination of indicators that they trust and are familiar with. Perhaps the most interesting use of the VWAP comes when traders utilized for programmers have created a standard deviation of price range anchored to the VWAP. This creates price regions above and below the VWAP, which make for surprisingly robust real-time support and resistance measures, essentially intraday supply and demand zones. All right, so I hope you got some value and worth out of this presentation. And in conclusion, this VWAP is a technical analysis indicator utilized by traders to determine that the average price of securities based on both price and volume, and it is a great tool to utilize for trades when you're buying and selling. However, it's best utilized when combining with other indicators, and that's when the VWAP offers that high probability of success from setups that can provide that dramatic potential of huge wins on the day. Since the VWAP is a daily indicator based off of price action, it's best used for day trading and short swing ideas, and it's not the best indicator when working into a swing that's supposed to pan out over the next few days or even longer in, say, like a leap. And I want you to remember that nothing we utilize for technical analysis in the stock market is 100%, but when you utilize it and to generate probabilities of directions, make educated guesses, the VWAP can be very helpful in making those educated decisions for high probability trades with spectacular return on investment. Just another tool for you to utilize on your market journey so that you are absolutely lethal in this marketplace. As always, if you're ready, follow me and let's go to war together, Team Traders War Room, baby. Another tech video at you. I hope you got something out of this. I hope you learned something and try utilizing this strategy to go out there and always make that market bend the knee, because TWR bows to no one. Upcoming events. If you're interested in the TWR Investment Club Christmas Club, sign up today because registration is closing on 20 April. You can sign up at this link right here, or we have the link in the description as well. But basically what this is a longer strategy for the club. Normally we run our clubs for 30 consecutive trading days. However, we've noticed that the current volatility in the market has affected the strategy as far as a risk versus reward standpoint. So we created a 6-month long club so that we can use other strategies that are more effective over longer periods of time, such as covered calls, covered puts, shares, and other strategies like spreads and stuff like that. This particular club will run from 1 May to 1 December, and we will liquidate the account just in time for Christmas. Sign up today to learn more, and also we will still be running the normal shorter clubs as we do this club as well. So we'll run everything in conjunction because I know some of you like the fast pace of the 30-day trade clubs. The sign up ends on 20 April, so don't wait. And next up, I want you to sign up today for the next class that we have, how to chart and trade patterns. And I'm going to instruct you on 23 April at 1 p.m. Central Standard Time. Listen, all that purchase this class receive the recording. So even if you can't make it live, I got you covered. But basically, I am going to teach you how to chart and find patterns before the big move happens so that we can absolutely kill the market and make hella bank. All you got to do is sign up on the website. Go to traderswarroom.com/upcoming classes. The link is in the description, and you will receive your confirmation email to the email that you sign up with. Basically, we want you to plan for battle utilizing TWR classes so that we can teach you how to make that market bend the knee. I'll see you in class 23 April, 1 p.m. Central Standard Time, and I hope to see a huge turnout because I want everyone to get this training. Activate your 2-day trial of TWR All Access on the Discord platform. We cover it all at Traders War Room, whether you're looking for stocks, options, futures, Forex, crypto, or even sports betting, or you want real-time alerts, live trading, algo signals, or even if you just want to be part of a community of like-minded investors to grow, learn, and share together as a team. Something for everyone at Traders War Room. Activate your 2-day trial today and go to war with TWR. The market is our war zone and stocks are the battle. Join TWR and let's go to war. Make the market bend the knee in 2023. Join Traders War Room and bow to no one. Let's go to war.